Welcome everyone to Cornell Cooperative Extension. I am Mike Danaher with the New York State Attorney General's office. My office is in Binghamton. That Binghamton Regional Office services the Tompkins County, Ithaca area. We have a broad area that we cover covering 8 counties, including Tompkins County as well. We come out to speak at Cornell Cooperative Extension on a monthly basis to touch on various consumer issues that crop up over a period of time. Today's topic is involving the ins and outs of insurance. We don't frequently hear about the insurance being consumer-related issues, but it really is a very important issue that touches all of us in one way or another. Just off the top of my head, people that own homes or have renters insurance, people that have cars are involved with insurance, and many other things. Health insurance has been a big topic that's been for many years. So we just want to encourage people to be good consumers. It can be related to any consumer topic. That would also include insurance. We want everyone to be good insurance. We want people to know that there are consumer rights out there. There are consumer protections that are out there. But we also have, as consumers, responsibilities. And we have a responsibility to be good consumers so that we know what our rights are. And that is not any less when we're talking about insurance and insurance products. Most of us are really not experts when it comes to insurance. In fact, we hear about the word insurance and our eyes roll up in the back of our heads, and we're saying, "Oh, I don't want to be worried about it." But because insurance touches our lives in so many different ways, we really have to be good consumers when it comes to insurance. Insurance is one of those things, unlike most other things that we would buy. Insurance is one of the things that we actually need before we want it. In other respects, we usually want something before we actually need it. A lot of instances, we want that new car, that different car, that before we actually need it. We want that newest cell phone that has come out well before we actually need it, if we ever need it. So insurance is a little bit different because we actually need it before we want it. Because we usually don't want it until after something has happened for which we needed it. So it's something that we kind of put in the back of our minds because it's not the newest finagled thing that we want and all that. So we tend to not be thinking about those sorts of things. But because it's crucial that we have it in certain aspects of our lives, it's really important that we start looking into it because it's clear that we don't want to have to spend money for it. With insurance, it's the sort of thing that we're really, really glad that we have it when we actually have to go about and use it. But then when we have to pay for it before we really have used it and hasn't provided us any benefit, like, oh, we're so grudging in trying to write that check for that insurance policy and get it. But boy, are we really glad that when we need to make a claim that we actually have it. So it's important for us to start looking at these things ahead of time. Be a good consumer. Understand what it is that what it is going to provide to us so that we can make an informed decision before it's this emergency. I'll use an example. One of my daughters had an issue with a car to where she had to get a car. Disposing of the car that my wife and I were providing for her because it broke down. Car broke down. She was out of town. She had to scramble because she had to get to work and all that stuff and get her own car. And this boggles my mind, is she ended up coming up with a deal. She did a really good job investigating what her options were, but she was not well versed in the other aspects of owning a car, which includes having insurance on it. And she could not get insurance on it through me anymore. It was not even in New York State. So she was going to have to get her own. It boggled my mind. She was allowed to drive the car that she bought off the lot without having an insurance policy. And I was beside myself. And she was of the view, well, yeah, I can get it whenever, kind of thing. It's absolutely not. You cannot get it whenever. You really need it. And so she had to go out and scramble and get something that turned out to be very, very expensive. Instead of having the time to look into these things, and because she didn't have the life experiences, her main focus was, I have to get a car to get me to and from work. Not thinking that, well, okay, if I have a car, I got to have insurance. So she did all her investigation on what kind of car she would get and where it was and all, and spent no time whatsoever on the insurance issue. And all of a sudden, because she didn't have time to think about it, she didn't have time to analyze it and stuff, she ended up having to getting a policy that she subsequently has canceled because she's gotten something else. But it's because she didn't think about it ahead of time. If we have time, all of us, on whether the insurance product is our house, our car, our life, our health, whatever it is, we need to think about this ahead of time because it really is something that we need. And then we can make the best decision. What choice somebody makes ultimately on what type of policy they get or anything, all is based on their individual circumstances, that all should be investigated ahead of time so that being a good consumer, they can make the best choice for themselves. Like I said before, insurance deals more with what we need than what we want. I can't really say that, unlike other consumer products, this is really something that we like having, but it's something that's crucial. We are glad. So we need to take the time to evaluate our needs, determine what is best for us, and that all falls down to being a good insurance consumer, making those decisions. Let's talk about basics. What is insurance? Insurance is a product that is designed to protect us in the event of a particular financial loss. That's all it is. The root of insurance is insure. And I took the opportunity to look up the definition of insure, although we think innately that we kind of have an idea what it is. It's to make certain, especially by taking necessary measures and precautions. And that's what we're attempting to do here. Insurance coverage is a contract whereby one party undertakes to indemnify, guarantee, or protect us financially against the loss as a result of a specified contingency or a specified peril. So we have to first understand what insurance is, and that is its protection. It is not an investment. It is protecting us against a certain peril. I'll contrast that with, there have been throughout the years, haven't heard much about it more recently because I think people are becoming more wise to it, that certain insurance products were being sold to us as a good investment. The classic example was what was sold back 20 years ago or so, in termed vanishing premium life insurance policies, where salespeople were selling these vanishing premium life insurance policies where at a certain point in time the premium just vanished. You still had the insurance, but it just vanished. And not only that, is that it would generate enough money that you actually could get income from it over a period of time. Wow, what a great deal. I have to stop paying. I still get insurance. And then I start getting a bonus. What that really was what is known throughout the insurance industry as a whole life policy. Meaning that if you invest with us X number of dollars every month or 6 months or yearly when you make your annual premium, the insurance company will take that money and invest it. And it will generate enough income that there will be enough to not only pay what the premium is, but also over a course of a long period of time, actually pay money to you. But that led to a problem because consumers are getting brought in and they're saying, wow, this is great. I only have to pay this insurance policy for 5 years, 8 years, 10 years, whatever it was being sold to them as. And at the end of that 5, 8, 10-year period of time, I've got insurance. I don't have to pay anymore. My family is set, and there's going to be generating more income as a result. And I know that because it was around that time when I started my professional career many, 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 many years ago that that's what was being sold to me. But I had knowledge of what the deal really was. And what was happening that I saw was that these presentations that were being made they would give you a spreadsheet showing, over a period of time at 8%, your money would accumulate and yada, 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 so that over 8 years you'll have this much in. It will generate this much a month in income or this much a year in income, and that's more than what the policy is. And so we'll just use the income to pay the policy and anything left over would be yours. Well, as it turned out, these sales presentations were actually using figures that were never being met. For example, they were saying, now if we invest this and it generates at 10%, yet it never generated 10%. So when somebody was expecting at the end of 5, 8, 10 years that their policy was no longer, they didn't have to pay it any longer, they kept getting the bill for the premium. Like, whoa, wait a second, this is supposed to vanish. Oh, we're really sorry. But when we made that presentation to you, it said that it was going to generate at 10%. Well, really, the market's not been great, and so it's only really generated 1%. So unless you want your policy canceled, you have to continue to make these payments. And that was simply a function of people really not understanding what was taking place here. The advantage that I had is that I kind of knew going in, and I knew about finance and the generation stuff, and so I knew I was not buying the policy as an investment. I was buying the policy as insurance, as protection. The good thing has turned out after dozens and dozens of years is that I just continue to pay it. I just continue to pay it. I haven't called the insurance company and say, hey, you've got more than enough of my money, just stop me. And what's actually happened is the death benefit has increased over a period of time to where it's significantly more than what the death benefit was when I first got involved in this thing. Because I bought it for protection, I put it aside, I got the bill every year, I just paid it. And that's what turned out. But some consumers were being sold this thing as an investment rather than a protection, and then they were misled. So Part of that is on the insurance company. Part of that is also on a consumer. Consumer has to understand this is how this thing really works. That's just one of the examples. I encourage people, if somebody's trying to sell them an insurance product as an investment rather than protection, run the other way. Go to someone who you trust who is selling you the insurance for what insurance is designed to do. Understand it's for protection. There are many, many different insurance products that are out there. There are some things that are insurance products, meaning something that is there to protect us, that isn't called insurance. What other things might it be called? A warranty. That's all a warranty is insurance. It's protection in the event that something happens. When you buy a new TV, they ask you as you're checking out, oh, do you want our XYZ protection plan? That's insurance. All it is insurance. It might be a warranty. It might be a protection plan. The fact remains it's still a warranty. And we as consumers have to make that decision. Do we want to spend that money? But there's no way to make that determination unless we understand what it is that we're protecting and for how long. Once we understand those sorts of things, we can make an informed decision as a good consumer to decide whether or not we want it. If we choose to buy it, understanding all those circumstances and everything, good for you. That may be. Someone else may decline it. And they may decline it by saying, because they've said, I thought about it, I really don't need it for this particular thing, not worth the cost of it to me as a consumer, I'll decline. So then what happens is if that calamity occurs, the television blows up after a year, after the manufacturer's warranty has expired, and you chose not to spend the extra $25, $50, $100, whatever it is, to protect against that, you can sit back and say, dang, my television blew up. Maybe it would have been a good idea at this stage, but I'm comfortable knowing that when I made this decision, I knew this is what could happen. I knew the risks associated with it. I weighed it and decided it wasn't in my best interest. I lost. Sometimes you win, sometimes you lose. But at least you made the informed decision. So, many different types of insurances out there. One of the most crucial ones that we have to have, anybody that owns or leases an automobile knows that they have to have a minimum amount of insurance. It protects us in a couple of ways, depending on what insurance we buy. It protects us for damage that we may cause as a result of the operation of the motor vehicle, damage to property, and damage to personal injury. Every automobile in New York must have a minimum amount of coverage. I haven't checked recently, but I believe it's 25,000, 50,000. It could be 50,000, 100 now, but I think it's 2550. And people don't understand, what does that 2550 mean? That protection that you get, I'm getting the minimum coverage. I bought a new car, got to have insurance. Give me the minimum without considering all your facts and circumstances. What that means is you are insured in the case of injury to others, or actually injury to yourself as well if you're involved in an accident with someone who does not have insurance, to the coverages of 25,000, 50,000. What does that mean? It means that if one person is hurt in the accident, let's say you hit somebody, accidents happen, and somebody's injured. Your coverage, you're covered for up to $25,000 in personal injury that someone sustains, or 50,000 if multiple people are involved. So if somebody is injured, and in this day and age, $25,000 is nothing. One person's injured, you're covered up to $25,000. If there were 3 people in the car that you hit, you are covered totally up to $50,000. So where does that leave you? Well, it leaves you with the fact that if some people are injured, one person is injured to more than $25,000 worth of injury, pain and suffering, all that other stuff, medical bills. Or there were 3 people in the car and they were all injured at $25,000 apiece. Your coverage maxes out at $50,000. So what happens to the extra $25,000 for the $75,000 in injuries that people sustained? That's on you. So it's only covering you up to a certain amount. So a good consumer will sit there and say, okay, how much coverage do I need to protect all of my assets? Because if you don't have enough insurance, they're coming to you for your assets to try and compensate them for their loss. Somebody has to sit there and say, how much insurance do I need to protect myself in the event of this accident? And discuss with the insurance agent how you can design an insurance product that will cover you for those circumstances. And then there's always the ancillary add-ons that you can always put in. For example, collision insurance, meaning if your car gets damaged, you're covered up to a certain amount for replacement, hopefully replacement value of the car. Encompassed in that $25.50, that minimum policy, or encompassed in an automobile policy that you have that may be higher amounts coverage, is included this no-fault provision, which in the case of you being injured by someone who's uninsured, you'll be covered up to the uninsured portion. If you are injured by someone who is underinsured, meaning not enough to cover all of your injuries, you can have underinsurance part of your policy. Meaning if their policy is the minimum, $25.50, you received injuries of $150,000, you can actually have a portion of your insurance cover anything that you've been injured over and above what that person was that hurt you. It's based on how much coverage you get. And so there are all these different things that you can have added to the policy that you, in your individual circumstances, have to determine what is best for you. Lots of times these add-on things are not that expensive. I'll use one that we have on our policy. What we have on our policies is towing insurance. If we have a car that becomes disabled and has to be towed somewhere, towing can be very expensive, by the way. We have a rider attached to our policy that covers our insurance, that covers a towing expense. So if our car had to get towed, in fact, I hearken back to my daughter whose car broke down and that led her to get the new car. The car that she did have, which was under our policy, we owned it, had to be towed somewhere. And that all we did was get a receipt for what it cost us to do the towing, submitted to our insurance company, and we got reimbursed for that expense. And it was a very small cost to add those things. So you can look at, see what might work best for you and get it. Serious consequences come from not having automobile insurance. You must be insured. If you own a car, register a car, such things as, one, it's a crime. If that's not serious enough for you, you can have your license suspended for the length of time that you were uninsured. So before you cancel your insurance policy, either turn in the plates or get a new insurance policy in place. That way there won't be, if there's any lapse between having insurance and then getting your next insurance without turning plates in, you could be subject to a license suspension or revocation. Or if you go a short period of time, 30 days, 60 days. I'm not sure the exact time. It might be up to 90 days. You have to pay a fine for the length of time that you didn't have insurance. And then, so you want to avoid all that. Make sure that you have it. There are serious consequences for not having it. Being an uninsured driver can be very serious with criminal charges as well as loss of your license. Homeowners insurance. Homeowners insurance, again, protects us in the case of loss of property. That's the one we think of mostly. Loss of property, a house burns down, we got to have insurance to help rebuild it. But it also has a liability component, meaning if someone is hurt on your property and you were to get sued, you have liability coverage in your as a part of your homeowner's policy. The amount of liability coverage that you get, again, depends on how much you're trying to protect. Also, the property coverage that you have depends on the value of your house. There are different coverages that you get. I know my salesperson, my insurance agent, will not sell me a policy unless I have what's referred to as replacement cost attached to my policy, which means for not much additional money, it's some additional, but not a ton in the grand scheme of things, I am insured up to the cost of replacing my house. So if I get an insurance policy, and let's say a house is worth $200,000, and you get it, and you've owned your house as long as I've owned my house, which is a really, really long time. Houses have a tendency to appreciate over a period of time. In my $200,000 house that I bought, and it wasn't $200,000 when I bought it, appreciates over a period of time. I may have a house that's worth $300,000 20 years later. But my policy is $200,000. If the house burns down, costs $300,000 to replace it, I have $200,000 of coverage. What's going to happen to the rest? So I have a replacement cost on my policy. And so my policy has to be updated every once in a while. And in my case, it has an automatic increase escalator to the policy. So if I have a policy in year one that's $200,000, year two it might be $203,000, year three might, and it grows over a period of time. That with the replacement portion to it, at any point in time, if it burns down, I get my house replaced, even if it costs more than what the insurance policy is. And we got to a point in time where I didn't look at it for like 15 years. With the escalator, that was just an automatic escalator, with the escalator in there, I was actually insured for well more than what my house was worth. So we had to actually pare it back a little bit, but keep the escalator in for future years. So that's the sort of thing that being a good consumer does, which is you got to look at it every once in a while. See if it's really still available to you. And there are other things you can add. If you have valuable property in your house, you can add riders. We have riders that cover certain things that are in our house that are pretty valuable that might be there. Jewelry, other things that you can have added to it. Again, I just want to impress upon you that the important thing is everybody's circumstances are unique and individual, and you need to decide ahead of time what it is that you need, and then you'll be protected. So if you have some valuable artwork in your house and you haven't updated your policy to where this particular artwork is covered if something should happen, you should look into those sorts of things and get the coverage that you need for that protection. Another thing that is really important to all of us now, especially nowadays, because of the cost of health care, is health insurance. It's the one we hear the most about, it seems like. we had the Affordable Care Act, and then we have claims of paring it back or not paring it back, or that whole argument that's going on. The important thing is that we need to have insurance. And I know it is really expensive. It's really expensive. Healthcare is very expensive. But we need to pick the plan that covers all or a portion of what we need it to cover for. Whether it used to be in the olden days, I can even say back in the day that I first started working, where it was just a given back in those days that employer provided insurance. That's what you kind of looked for. Is you had the employer, and they gave you your insurance, and that was just one of the deals. Well, it's not happening as much anymore. And at the very least, what's happening is that we as employees are starting to have to contribute part of the expense of our insurance. So we need to know what it is we need to be covered for, who it is that we need to be covered, where is our insurance coverage going to be used to make sure that our providers are covered under the particular policy that we're getting, and compare that with the cost associated with it. New York has New York State of Health website that can help people make decisions on what might be best for them. There's Medicare. One thing that I want people to understand is that there's a difference between Medicare and Medicare Advantage plans. It's kind of a misnomer. Actually, Medicare Advantage plans are actually private plans that pull you out of Medicare. So be aware of that. Don't be sold a bill of goods unless you know exactly what it is that you are getting. There are health insurance counselors that are out there that are very valuable resources in our communities that can help us weigh through that. I know our office itself, we have a healthcare bureau, and we have a booklet, Shopping for Health Insurance Tips, on the open enrollment time at the end of the year. I know we're earlier in the year, but people are kind of made their selections and are on their way for this year. But it'll be fast upon us again toward the end of the year. And start thinking about this ahead of time so that we can make good decisions about what we need. Our health insurance, depending on the coverage, covers all or a portion of our medical or hospital bills, our pharmacy bills in some respects. Some cases there's co-pays, some cases they're deductibles where you have to meet a certain threshold before you have things starting to be covered by your insurance. Investigate what all the options are. I think you need to take into account what your health currently is and what your health history is to make a determination what would work best for you. Because again, it's a protecting your assets, because all you need is one catastrophic health event that can hurt you financially. People have been forced into bankruptcy just because of health insurance bills and things. So it's something that we need to take into account, and the best time to do that is now before we actually need it. There are other types of insurance plans out there, such as for those of you in the seniors demographic, which I'm fast approaching. There's long-term care insurance. That's insurance that protects our assets in case of having to go in for long-term health care, nursing homes, those sorts of things. As most products are, the closer you are to using it, the more expensive it is. So the older that you are, going out and investigating the cost of a long-term care policy is a lot more expensive than being a younger person and buying a long-term care insurance policy, because obviously if you're younger, you're going to be paying into it longer, so there'll be more money available the longer you have as compared to the older you are, the less time you have to pay in order to be covered. So it's more expensive. But it is, again, designed to protect your assets in the event that you have to go into nursing home care. People have caught on to the fact that there was a point in time where people were trying to quickly dissolve and dispose of all of their assets so that they can then enter a nursing home and say, well, sorry, I don't have anything. I gotta be covered by Medicaid because, I don't have anything. Well, you just gave away $2 million. Well, why aren't you using those assets? So government's caught on to that. The cost of Medicaid is going through the roof. Cost of Medicare is going through the roof as well. Government subsidized programs. So there are certain things that you cannot do, and that is get rid of all your stuff and then expect to have the government pay for long-term care. So everybody's situation is unique. What people need to do is they need to speak to an attorney that does elder law, estate planning, earlier rather than later, to make decisions on how can I set up my estate plan so that I protect myself in the event that I go into a nursing home. How can I do that? What do I do? How do I fashion it? Do I get long-term care insurance? Do I change my estate plan? How do I go about doing that? It's important, again, to make that decision early, and then you can design that plan so that when the time comes, if that time should come, you're comfortable knowing I did everything I could. Or maybe you don't do anything. Maybe that's because it's not in your best individual interest to do that. Great. At least then you can say, hey, I was a good consumer. I investigated this whole option. Disability insurance. Again, protection in case we become disabled. There's a lot of different disability policies out there, and you have to figure out what is it that I'm trying to protect here. If I have a family to protect, do I get disability insurance so that if for some reason I don't have that income, how can I protect myself? There's also group disability policies where you will frequently see if you go to get a loan of some sort. Best example is a car loan. You go to get a car loan. One of the things that you get offered is part of the presentation is, do you want disability? So that in the event that you become disabled and you can't make your car payment, that you would then be covered under this policy. And you think, okay, maybe I want to do that. I say, investigate your options. There are different types of policies out there. These group disability policies are there to protect your payment, your car payment. And that's it. That's your car payment. That's all it's there to cover. So if you become disabled, the only thing that's going to be taken care of is the car payment. It doesn't mean you're going to be given an income to help cover your other bills and things. You might think, well, you know what? Rather than just get a group disability policy for my car, I'll go and investigate my options, which will be more expensive. I'll give it to you. It's going to be more expensive. Where I'm going to get paid a certain amount of money during the period of time in which I'm disabled. I can use some of that money to make my car payment, but then there may be other money left over to help pay for other living expenses. Again, it's what is best and individual for every individual going. Choosing to say, okay, this is the way that I'm going to go. The one thing about group disability policies that can be of concern, and also there are group life insurance policies for the same purpose. If you should die, you don't become disabled. You go even farther than disabled. You die. You can buy a group life insurance policy. Same thing. It's usually in the sales presentation is, do you want group life? Do you want group disability? Two separate things, or a combination of the two. And that, again, with group life insurance policy, it only protects the loan. So if you pass away, it's a 5-year car loan, and you pass away at 4 years, 11 months, the only thing the insurance policy is going to pay is your last payment. That's it. You may say, well, you know, I'm buying a $25,000 car. I'm going to go out and get a $25,000 life insurance policy so that if I die, my estate will get $25,000. I may only owe $500 last payment. That means my heirs get $24,500, not zero. Again, it may be a little more expensive, but there's something to show for it at the end. It's based on whatever individual circumstances were. The other thing is with the disability, group disability policy, it makes your monthly payment on your car, I'm just using car as an example, it could be personal loan, it could be anything. It only makes the monthly payment until the disability ends. Or the policy ends. And there have been situations where the maximum group disability policy is, say, I can't remember what it is, but there was a maximum. I haven't checked in a long time, but it may still exist, that a group disability policy, the most that the policy can be is $25,000 or $35,000. There could be a scenario where during the term of your disability, the monthly payments add up to more than the $25,000 or $30,000 maximum disability benefit. And people have been known to receive notices from the insurance company saying, you have reached your maximum, we're not paying anything any longer. And then the person is stuck because they still have a car payment because it didn't pay the car off. Because when you become disabled, that may not end, but the payment may end before the car payment finishes. And all of a sudden, you thought you were being protected for the entire time that you've owned this car until the thing gets paid off, and you aren't. That's fine as long as the consumer understands that going in. So investigate. If you choose to say, okay, I'm thinking about getting this group disability policy to cover the loan on my car, is there a maximum payout on this? And if it is, what is it? And you say, well, maybe there's a scenario where you've borrowed enough money that you could max out with, obviously on a loan, you have to pay the principal, which might be $25,000 over 5 years, but you also have to pay interest on that $25,000 over the 5 years, which obviously makes the payment more than $25,000. It might be $35,000. And so whatever you choose, you may say, okay, I do like the group insurance because it's cheaper, the group disability insurance. But I think what I'll do is I'll make more of a down payment. So what I'm borrowing is only $15,000 rather than $25,000, so that I'm assured that over the life of the loan, if anything happens to me, this policy will not end. It'll pay until the car's paid off, and then I'm good. It's a long-winded story for saying each person's circumstances are individual, and we need to investigate. Kind of segueing over to life insurance. Life insurance is another area where that's definitely one of the policies that we need before we want it. Nobody ever thinks about the fact that, you know, I could actually die someday. And they'll say, I got to protect something, my family or whatever. But it's crucial. People have to understand what life insurance is, what products are available. There's two main types of policies. There are hybrids and things, but there's two main policies under the heading term insurance or whole life. Term insurance is exactly what it means. It's for a term. So if you die within that term, you have an insurance policy. Term policies insure against the loss for that particular term, rather than a whole life policy which protects you for your life, the whole period of time. And so with the term insurance, the chance of you, the odds of you passing away during that term vary depending on age and health and all those sorts of things. The younger you are, obviously, the term insurance is all really inexpensive because the chances of it happening are small. Not zero, but smaller. As we get older, the chance is there's going to be a claim made against that policy. So as we age, the premium changes every year as we get older. There's certain thresholds where it really jumps up, like at 40 and at 50, 55. It jumps up and can be expensive. People don't realize that policy is actually a new policy every term, a new policy every year. Because what happens is you buy a policy with an insurance company, you get term insurance, and it just renews every year. And so you get a new bill every year and you just pay it. But really it does mean that it covers just that period of time, that term. And you'll notice that your premium will go up because it automatically renews. You get a bill every year, goes up, you pay it. To get to the point in time where you're my age and you get the bill and you go, whoa, that's gotten really high over the years. But hey, it is what it is. Whole life is a flat premium. In other words, the term, it goes up every term. Whole life, you buy it, hopefully at a young age. I bought some at a young age. That was the thing about the vanishing premium life insurance. That's what a whole life policy is. It covers you throughout your whole life. So rather than it be a term policy, it's whatever your life is. And they use morbidity tables to determine how long, if you buy it at 25, what's the chance that, how long is your life expectancy? And then they figure out how much insurance you need to cover for that period of time, and they figure out what the policy is, and it remains the same throughout your life. It's a flat premium, stays consistent. It usually pays dividends because they invest the money because you aren't going to use it, so they invest it. It generates income. It could go toward reducing your premiums as you get older, reducing the amount you have to pay. Or in my case, I just keep paying it. And actually the death benefit, if something should happen to me, increases, and I figure, well, my wife is protected, so that's okay. We'll just keep going the way it is. You have to choose what it is that you need to protect. How long do you need to protect it for? Does term insurance work best for you? Because eventually the kids are going to be out of the house and they're going to be self-supporting, so I don't have to worry about them after a certain age. Except in this day and age where it seems like they all come back home and live with us, which is great. But hopefully self-supporting. Decide what works best for you. Do I need it for the whole life? Do I need it for a term? How much is it going to be? Check the companies. Check and see how they're rated. Are they good companies? Are they going to be around for a while? Are they going to follow you through? These are all things that we need to consider in being a good consumer. As you can see, there's many different products, many different risks that we're trying to cover. We have to be a good consumer when that comes into play. We first need to determine what our needs are, and then what coverage will meet those needs. Decide which product is best for us. Shop around. Pick the best companies. Don't pick a company because they have the best ads on TV. Choose what will provide the best for you. Make the decision that is unique to each of us, and what is good for one person is not necessarily good for others. Don't be rushed into purchasing something. Don't feel pressure. That's the number one scam out there. Don't be rushed into taking something. Don't be swayed by somebody contacting you by email saying, oh, this is a great insurance product and pick this one. Investigate it. There's a lot of really good insurance agents out there that will guide you down the best path for you. If you have any problems related to this, make sure to report it. There is actually an agency that in the state of New York that oversees insurance companies. All insurance companies selling products in the state of New York must be licensed in New York. The agency used to be the New York State Department of Insurance, but that no longer exists. What we have now is the New York State Department of Financial Services, and under the New York State Department of Financial Services, that actually was a merger of certain departments. The Department of Banking and the Department of Insurance got merged into the Department of Financial Services, so they license insurance companies. So you can check with them. You can check with our office to the New York State Attorney General's office. If you have a problem, we have a healthcare bureau that can help with that stuff. We also have a consumer mediation program that if somebody's having a problem, we can try to mediate those problems. For assistance also, the local office for the aging can give people some guidance, especially when it comes down to healthcare and making those choices that you have to make. They can guide you to the health insurance counselors here in Tompkins County that can assist you. Lifelong, I believe, was the health insurance counselors. I don't know if that is still the same here. Just be wise consumers. Be wise consumers as it relates to insurance or any other consumer-related product or service out there. If you do your investigation, if you become a wise consumer, investigate all of your options. It really is not as daunting a task as some might think that it would be. And think about it. If you investigate it and learn what the options are and things, you can be a resource for others. You can help your friends and explain to them what you went through and give them some guidance as well. If you do that, I think you go a long way toward protecting yourself and protecting your properties and your families. If everybody has any questions related to insurance products or anything, I'd be glad to answer them. If not, I encourage all of you out in television land to come join us. We're here on the second Thursday of every month at 11 a.m. at Cornell Cooperative Extension on Willow Avenue in Ithaca. It's great when we have people here, smiling faces, questions asked. It always helps. And it may be something that I didn't remember or forgot about as I was just rambling on. And somebody can ask the question and that'll trigger something that I hadn't thought about. So come join us. We always enjoy having people come down. We hope to see you next month. Again, the second Thursday of the month at 11 a.m. Thanks for joining us and hope that we'll see you sometime here.